It's an interesting thing when we talk about energy on the continent and all the problems that exist on motivating capital to get there. We've talked with developers, we've talked with entrepreneurs, we've talked with solution providers that are trying to deal with stuff on the ground. In today's episode of Energy in Africa, flip the coin and we're talking with people that are being equally as innovative and creative about how to put capital into the energy space. My chats with the GAIA Group have really enlightened me to the opportunities that exist for capital expansion and the creativity that people are using equally in capital usage and capital mentorship, really, for others to say, there is a different way of motivating capital, of reducing risk, increasing return, with risk that's perceived risk versus actual, and finding a way to quantify some of those things and move forward. So I hope you really take some time to dig into some of the things that our guest, Mich Nieuwoudt, has talked about here in today. And without further ado, we'll dig right into my discussion I had earlier today with Mich and hear more about some of these solutions that his group, the GAIA Group, have come up with. Hello, folks, and thank you for joining us for another episode of Energy in Africa. I'm quite excited this week again to have another great topic that is very broad in scope, and the depth that this individual brings to the marketplace is really quite something. Today I'm chatting with Mich Nieuwoudt, the chairman of the GAIA Group based in South Africa. The things that this entity is doing as far as forwarding energy and Africa on the continent are quite substantial. So let's just dive right into it and welcome Mich to the podcast.
Hi, Chris. Thanks for spending time with me this afternoon.
One of the things that we like to do here is start off with letting you take the floor and tell us about yourself. Tell us about Mich and tell us about GAIA.
Thanks. Well, Chris, I'm an engineer by original training, but I spent my life in finance. So I've been, or I think that engineers with a financial qualification is a suitable setup or armor for this industry that we're in. It's a combination of finance and engineering, technology, project management, and all of those things are captured in those qualifications. I was one of the founders of GAIA back in 2012, and GAIA was established specifically to facilitate the investment of long-term patient capital out of institutional investors, institutional asset managers into the nascent private infrastructure, and specifically private infrastructure that one could invest in equity in South Africa, and we are now expanding into the rest of the continent north of the South African borders. So to date, GAIA as a group have done about 12 transactions of about $250 million in total over the past 10 years. We started in renewable energy infrastructure in South Africa. We did the first secondary equity transaction in the South African, what's called the REAP program, the Renewable Energy Independent Power Producers Procurement Program.
Mouthful.
You can think of an acronym like that. We then also did or participated in the largest secondary, or at that stage, the largest secondary transaction. We listed the first yieldco on the Johannesburg Stock Exchange, specifically focused on on renewable energy. Subsequent to that, we expanded our scope into transportation, into toll road concessions. We listed the first specialized, and we're going to talk a bit later about permanent capital structures, a specific renewable energy usage compliant entity on the Cape Town Stock Exchange. We also listed the first REIT, real estate investment trust vehicle, also on the Cape Town Stock Exchange. We are in process of doing another listing in the first quarter this year. We've also expanded our focus into agriculture and let's call it more vanilla private equity. So we've been busy, but our focus has been solely on infrastructure investments out of long-term asset allocators over the years.
You haven't been sitting on your laurels, have you? You've just been kind of...
Look, in 30 seconds, you always give the highlights of the good stuff. There's a long list of, sort of scars and bad stuff. And, I wasn't this gray when we started. So yeah, but Chris, it's all good. It's an exciting industry, and it's such a privilege to be involved in. Let's call it first. So Chris, I'm so excited about what's happening on the continent, the African continent, in terms of infrastructure. There are so many things about Africa that excites me over the next 50 years. It's the last of the continents that are able to reach or reap the demographic dividend that other continents have had. We've got such a base for growth. Technology has the opportunity to leapfrog some of the investments and technologies that we've seen on other parts of the globe. It's an exciting space to be. I wouldn't want to be anywhere else.
So you are where you are today, but as you've already pointed out, it's been a journey, right? There's twists and turns, there's bumps in the roads, and sometimes there's finish lines, and you get to enjoy all those things. But one of the things that no doubt continues to happen is, can use the same analogy, as more people get in the car along the way. Your team, it has probably changed and morphed and grown. Tell us how your team reflects your changing profile and what's there for a team today.
No, Chris, I'm extremely proud and so proud of the team and what they've accomplished. So we are obviously in a specialist field like that, not a large team, but we boast 2 PhDs in engineering. We have a actuary that spent some time at Harvard. We've got another 2 young guys with, I've only got 2 degrees. Our young guys walk out of there with 3-4 degrees. So eminently expertise. You have to have the academic background. You must be able to do the maths. Because if you struggle with the basic concepts, it's like your multiplication tables. The rest are going to be exceedingly difficult. We have a strong bias for engineering. Okay. In-house, we do think that engineering as a first qualification gives you synthesis, or the ability to synthesize new thinking and new ways of solving problems. And then, as I say, the rest of it, on top of that. So we've got chartered accountants or engineers turned chartered accountants. We have engineers with masters, masters in commercial, in a commercial line, with CFAs. The 2 PhDs are, the one PhD did his dissertation on anti-fragility, the Nicholas Taleb topic. The other one did it on the strategy of smaller enterprises, both very relevant to the field that we are in. And our actuary, my colleague Rene, who's the managing director of the company, he spent a number of years with South Africa's, if it's not the largest, it's the second largest, I never know, it's a tight competition, life insurer, specifically working on private equity transactions on the African continent north of South Africa. So I think we have a very well-rounded team, and now with our dollar fund that's going to be domiciled in Luxembourg, we also have representation in Norway. So we have a branch office in Oslo with a very well-respected investment banker heading up that team. Our chief risk officer is also a chartered accountant who worked at the Johannesburg Stock Exchange and at the Cape Town Stock Exchange. She did a master's in sustainability, and she's working in London. So as a team, we have expanded, but have remained very much focused in line with GAIA's beginning. We think that focus is the right thing to do in the space that we're in.
So there is a very, we'll call it a core element, a soul that your firm seems to have, and it's been broadcasting out from that. What's the relationship between the name GAIA and how you guys work?
Well, so GAIA, and again, you probably leave it to a bunch of engineers to choose a name. We found out after we started the company that we are by far not the only company called GAIA on the face of the planet. But certainly the bond is to Earth as so it's the goddess of the Earth is called GAIA. Yeah. And the idea, I think, is that Earth as a system or as an entity, there are interconnections and relationships between the various systems, how nature operates, how global economies, how human beings operate. So there is a sense that there are issues and systems that we have to look at on a global basis. And as I say, from the esoteric Gaia, where you can see where Gaia can be viewed as Earth as a living organism, which is now, let's call it the one side, but certainly as engineers and as practitioners in this world that we live in, is that it is most certainly an interconnected system. And we see it in these conversations that you and I started a while ago, that we have with our common friends who are all over the globe, our interest all over the continent, and the investors we speak about in Europe and elsewhere, and similar companies to ourselves that do, let's call it, that operate in the same new sphere in, right across the world. So that's where Gaia and the collaboration between the systems, I think, really resonates and echoes with us.
So as engineers and project managers and then financiers and going through this process, your start was in South Africa.
Correct.
And your initial investments seem to be in South Africa as well. You're growing past that, and you talk about the continent now. How do you see, call it, South Africa's leadership in the energy pursuits radiating out to the rest of the continent, and how do you see yourselves as a part of that?
Thanks. Look, South Africa's leadership in energy is a debated issue. I mean, as you know, South Africa isn't setting itself apart at least in country. We have rolling blackouts, and we have our own host of problems from a pure electricity supply perspective. But notwithstanding the fact that we have rolling blackouts, we see the regulatory environment and the ability for private investors to directly participate in infrastructure. That's super interesting, and that is and the opportunity of a lifetime for private investors. And that can be seen, it's called it out of an investment and portfolio management against the background of, you know, how you split your assets and how you allocate your assets over time and over area and over industry. But the big thing that triggered the opportunity or the possibility for a private investor, not necessarily a retail, as I say, private as in let's call it a private UCITS or a wealth manager or
institutional,
family,
that kind of thing, yeah.
Institutional investor to participate directly. That's new. It wasn't available 15 years ago. 15 years ago, it was impossible for an institutional investor in South Africa to own a direct ownership stake in a power plant. You know, and if you can take out those layers of ownership, typically, maybe I should pause here to say, okay, well, how were power plants financed 20 years ago? You did it via government bonds. So an institution bought government bonds. The government used the proceeds of the bonds to go and build the power plant. The power plant benefited the economy, and the institutions got paid back on their bonds. But as one can now probably think, that there are, let's call it, multiple levels, possibly levels of inefficiency in that system versus you have private investors investing directly in the power plant. You're closer, fewer layers, more focus. You know, I know what's going on in my portfolio, and that, in combination with the fact that you talk about a project finance or ring-fenced capital structure, the difference between debt and equity in such a project is, in our house view at least, not significant. So the ability to be on the equity side doesn't, you know, it actually gives the investor more power rather than more risk. So we think that the risk reward is also worth it. And I mean, you know what yields are doing out there on a global basis. And if you are investing for the long term, like pension funds and institutional investors do, assets are difficult to come by.
Now with the changes in regulation that your country has experienced, and now that we have the Africa Continental Free Trade Agreement, regulation and the spread of that kind of, call it, growth that the continent is experiencing, how is that providing opportunity for your future investments, and where do you see expansion through past Southern Africa region in the energy sector?
It's an interesting question. For let's call it a technologist or an ex-engineer, what we see here is, or in my view, the technology makes it possible for us to generate, transport, and consume electricity different than you could when these regulations were written. So, you know, I almost want to say 50 years ago, you had large power plants and power lines distributing electricity to far places, and you had households and industry being net users with no ability to store electricity, generate their own electricity, variable or vary their own demand. So technology has just caught up to such an extent that you are able to do things in the way the electricity generation, transmission, distribution, use, demand management, storage, all of those, the various elements of, I'm going to stick to electricity, how that system works, and that you see against the regulations that are normally a bit, I wouldn't say regressive, but behind.
Arcane.
So,
They are. They're from a different era.
Yeah.
Full stop. Yeah.
So what we see is that the liberalization, and again, maybe, it's difficult for me to pick the exact word, but the regulations, if you let some of the regulations go, the ability of generation to work differently. We have silly things like the ability of residents or residential users, of commercial users, to generate electricity at a great tariff during the day. Increasingly, the ability to store electricity that they make themselves via batteries. Utilities are able to produce electricity on a smaller, more modular scale. So you have all of these elements that make it possible to have a freer regulatory environment, and where the role of the regulator shifts from being the where the regulated state entity changes from being the regulator, the generator, the transmitter, and the price setter. You now see the changes in the system, how it's breaking down, and obviously that gives the opportunity to private investors to say, I think that's a growth opportunity in the market. I think this thing is going somewhere. So it's much more fragmented than it was, and it's not technology led. Not talking about Web 3.0 type of thing. I'm talking about it's things that we almost take for granted. But it's still, the regulations are behind the things that you can do with the technology. And that's a massive opportunity on the continent.
And that's the spread, right? Therein lies why energy in Africa is got that value proposition, because the technology is so far ahead of the regulation that there is a change here, and private business, private money is finding opportunity, and you guys are helping that money find sound places to go.
No, for sure. And I think, one of the things that we probably don't need to debate is that I don't think there's a scenario, catastrophic, optimistic, whatever, where we see people on Earth using less electricity.
Right.
That everybody is on their way of progress, and again, whether you are progressing slower or faster, whatever, you are using more electricity, and the use of electricity becomes more widespread and more per capita in any way you measure it. So the challenge is not in trying to keep people to use this technology, it's to provide more of it more efficiently, and that's such a great space to be in.
Like you said, the marketplace is growing. Not one of the things I've heard said, and I repeat many times, and is that yes, there is a need for those that don't have energy, but those that have the ability to pay for energy continue to use more and want it more stable. And that in itself is an amazing marketplace.
No, absolutely. We're not talking about, let's call it, people, you have access to electricity and then somehow your use, flattens out. So, whether you come from a zero base of electricity usage and that goes up to, I have electricity and I'm just using more and more and more and more. And I think it's common cause. You talk about climate change, and we're going to probably spend some time on the various technologies, but that's the way you make, transport, and use electricity. It's not the thing that you are using per se.
Yeah.
And again, so you sit with a luxury problem where the joules that you are producing is being used more and more and more. Maybe I'll contrast it to oil or coal, where you are probably having the reverse fight, is that where the conversations, the questions are, where is peak oil? Is it past or is it in the next 5 years? But I think there's agreement that somewhere there's going to be peak oil. Somewhere there's going to be peak coal. And it depends on your view on it. But you're talking about something growing or that grew and now it's going to flatten out. We don't see the same happening with electricity.
Nobody's talking about global peak electricity, right? It's the
exactly. So you're feeding an escalator that's going up, not an escalator that's going down.
So you've been involved in all kinds of projects over the time that from a engineering student to the leadership of a firm in the financial sector. It's great to talk about all the things that go well, but when have you stubbed your toe? What in this space? I mean, we talk about the regulator in South Africa having their issues. Where have you guys as a firm stubbed your toe and learned from it? What's an example of that?
No, I think there's a saying, and it's maybe there out of Silicon Valley, that says sometimes being first is the same as being wrong. So where we have tried things, and I mean that's probably one of the freedoms and one of the great advantages of working in a firm like ours. When we listed our first yieldco on the JSE, we found that certain assumptions that you make about tradability and the ability to issue more shares, the structure of your ownership, those kinds of things, how you set up something, because now you're doing it the first time. Not just we're doing it the first time, it is the first time it is done.
Right.
And you make mistakes, and or maybe mistakes is overstating it, but you could have done things better, so it takes a long time to fix. And while you're trying to fix what you should have done right the first time, the market moves on and other guys come. So you have a market that's moving. I mean, I can give an example. As I said earlier, we did the first secondary renewable project equity in South Africa. That was in 2014, I think.
Okay.
And I mean, that market has become such a large market that a lot of the smaller developers that gave firms such as ours the ability to transact in that market it has grown so big that IPPs and the developers are really into decade, multi-gigawatt procurement rounds and structures. So you find that there's a wilderness, and then there are some questions that you answer in a specific way, but then the market sorts itself out and becomes hopefully more efficient over time, and that certainly is what we found. And then other things, you regulatory wise, you hope for things to happen faster than they do, and they don't.
What? And, regulations in Africa don't change quickly? What?
It's maybe, it's probably the one enemy that we have in our industry is, if you're not patient and an endurance athlete in this business, it's going to be a long, dark, cold night. Because changes are spoken about years and years before they actually produce things. And it's a it's not a political problem, but it's a symptom of politics. You know, if you have the political will, you can do things quickly. And I mean, COVID is not a good example, but I mean, you saw governments doing things over the entire planet in very short order. But then you see other things where it seems politically that the wolf is not at the door, so I don't need to change anything. And then when you do need to change it, then again, you know, to take it through that whole political machinations and machines and regulators and things that lots of countries, you know, have, it just takes long. And as I say, we and our investors and asset allocators, you have to make investment decisions every day. And what's more, and I think that that's a lesson to regulators and politicians everywhere, investment decisions are always relative. Investment decisions are not absolute decisions. So it's not something like, I'll take South Africa as an investment destination. It's not as if an investor sits today and say, I'd like to invest in South Africa. And then they look at the country and they see, wait, but there are things that I don't like. You know what? I'm just going to wait until the country is ready and then I'll invest again. They look at the country and they say, well, I wanted to invest. It's not ready. So, you know, what about Vietnam? You know, or what about Tanzania? So you compare investment decisions or the ability to make investment decision, it's against other things. So you are always, and competing is not the right word, but a clever asset allocator makes the trade-offs and chooses between the various opportunities that are available now. And that is something that I wish I could shout from the rooftops to regulators and politicians, because somehow they think that investors are sitting out
waiting in the wings.
Waiting in the wings until, you know, don't worry about it. You have another year to fix whatever is wrong, or, you know, don't worry about it. We know there's an election cycle coming. You guys get through your election cycle and then we can talk again. It doesn't work like that.
The inverse of that is, what are you most proud of? What have you and your team, whether it be a project, whether it be getting something over a regulatory hurdle, whether it be landing an investor, what is it that you go, yeah, that's something that, you know, we had a real win?
Well, luckily, that list is much longer than the disappointments and the gray hair stuff. You know, luckily, as you know, you worry about stuff even if it's going well, because you worry, is it going to keep going well? So, you know, as an aside, no, I'm extremely proud of our ability to think laterally as a company and to do, let's call it, the first things. I mean, I'm very proud of our permanent capital structure vehicle that we listed on the Cape Town Stock Exchange. You know, we're going to talk about why we believe there aren't enough permanent capital vehicles as opposed to closed-end funds or private equity funds or those kinds of things. You know, and where investors, I think, will, if the correct permanent capital vehicles are available, rather use them as conduits for their capital.
Why do you think that? Why do you think that?
No, let's look at the two ways where. So I'm an investor sitting in Canada. Yep. An institutional investor sitting in Canada. I look at the planet and I say, okay, here's this continent, Africa. They contain 20% of the world's population. Okay, so a fifth, roughly, of the global population. Yeah. They have more or less, and again, 3-4% of global infrastructure investing is going into this continent. So there's arbitrage. I don't need to. So something is not right. You have a fifth of the world's population on a piece of land, while you have 5%, 4% of the world's investment goes there.
Yeah.
So there's an opportunity. So now I sit in Canada and I say to myself, how am I going to invest there? I'm keen on infrastructure. I think I know how it works and how it's the underpinning of economies and all of the characteristics of infrastructure as an asset class that I don't need to go into here. Now, how am I able to invest there? Typically, to date, you invested through large private equity funds, the Denhams of the world, the Actises of the world, where there's a private equity vehicle of very good private equity guys, but it's a closed-end fund, so you are into an opaque, might have a negative connotation, but the point is that you invest in a fund, your money is committed for 15 years, 10 years, and there's a valuation, and in 15 years' time, you'll find out how it goes.
Right.
In the meantime, it's in quite a rigid structure where there's little tradability, there's little visibility. So those can be better. Compare that to you are investing in a listed company or a listed entity. So here's an entity that you list. The business of that entity is to do exactly what your investment mandate is. Now you have an entity that has the corporate governance and oversight and structures and rules of an exchange. You have the ability to trade an instrument. Forget about liquidity. It's about tradability. So I can easily trade in and out of positions. You still need to find a willing buyer, willing seller, but there's an instrument that can trade on the exchange.
Right. You've got a mark to market daily, so somebody can trade. Yeah.
All of those things are done. And now you have a much more efficient for the investor and for the company, the applier of capital into infrastructure. And that's what we listed on the Cape Town Stock Exchange a couple of years ago. What we've now also done is we've listed the first with a fiber optic REIT that we did. Is you see that fiber optics and probably other infrastructure asset. It's a real estate investment. And
it's infrastructure, sure, yeah.
It's infrastructure is coupled to immovable property through, let's call it, any legislation that you can look at. So again, here you have an efficient structure with good governance, with tradability. You have a proper set of information communicated and delivered to the market, equitably. It's just a more efficient way of applying my capital, and we think that there are too few of those for the amount of capital that needs to go into infrastructure on the continent, and what investors are able to do. But now you have to do these new things. And your initial question was, what are we proud of? We're proud that we could set I hope, the wheels in motion for more of these vehicles, larger vehicles like this. Again, maybe like engineers, if we look at the numbers in the portfolios, it might not seem that impressive, from a hard currency perspective. But, you prototype a new vehicle before you put it into the mass market. But that's what we're proud of. We're proud of doing innovative new things successfully and then making them run. Now, obviously, our job is to scale them up and broaden them, and that's what we're doing with our Africa Climate Fund.
So I was just about to tie into that and say, okay, people want to deploy capital. They want to deploy capital on scale. Part of the concern about energy projects, we've already gone through this, is there's diverse regulation. There's all kinds of fracturing, which means there's often, call it, smaller developers. There's not too many projects on size. You guys are trying to tackle the problem from a different perspective. Walk us through that with your new climate fund.
So if we maybe step one back to the typical infrastructure development process. Typically, you start out with a developer. That developer identifies a piece of land somewhere and does an environmental assessment, and they possibly PPAs. But that group starts from nothing to make something work. That's typically funded by lots of DFI funding, development financing institutions on the continent, or private equity groups. But once these projects are post-construction and operating, the natural market dynamic should be, now that the risk of the project not being developed, not operating to specification, not delivering on what it should be doing, now that risk is less, that one should recirculate that capital, that higher risk seeking, higher reward seeking capital, and the skills that can make something from nothing. You must recycle that capital to more patient, more conservative, longer term owners that you typically find in pension funds and long-term investors. And in Africa, we identified the secondary market, this post-COD investment market. It's just not there. If post-COD projects are sold, they are typically not done at an asset level, they're done at a portfolio level. So Fund X closes its entire portfolio, and you are able to buy stakes in projects in Mali and Tanzania and Cote d'Ivoire, wherever, but you're buying that as a portfolio, and there's some development assets and all of those kinds of things. Rather than, if you are able to say, I am the pension fund in Kenya, I would like to own a piece of a Kenyan infrastructure project, but I can't take the development risk with my pensioners' money.
Right.
But I'd really like to own a piece of this asset in our country with our pensioners' money. That makes sense. So that's what we've done in South Africa. We've offered more conservative investors the ability to buy into less riskier assets, and not risk in terms of absolute risk, but relative risk. And we now want to take that concept into the rest of the continent, where the delineating factor is actually just the base currency of the project. In South Africa, we find that most projects are priced in the local currency, in rand. And international investors typically would like to work in some hard currency, dollars, euros, those kinds of things. And if you build in, let's call it, those exchange rate variations and fluctuations, it adds a complexity that actually should not be reflected in the risk profile of the underlying infrastructure project that you have.
Gotcha.
So we split the geography, not because we think somehow South Africa, is something special to the rest of the continent, but projects are typically priced differently in north of the South African borders in hard currencies, and just you're removing one variable out of the equation that makes it easier to value and operate your asset more efficiently. So we're going out there into the rest of the continent to say there isn't a secondary market. If a developer wants to sell out or sell down on a per asset basis, or a fund wants to sell down or sell out on a per asset basis, there's no one they can sell to.
Right. Yeah.
And that's inefficient. So if you have the ability, and as I say, not sell out necessarily, but sell down, we are there and we would like to participate on a compressed yield with an investor that has a different outcome in mind than a DFI or private equity investor that funded that project through development to COD.
Do you think this process then, where you guys are stepping in to recirculate capital on the continent, is changing perceptions of risk for capital outside of the continent? So from the global north, that perceived risk is lowered because of that, and let developers keep taking risk? Or how are you feeling about your interaction so far with capital from the global north?
We've engaged with obviously lots of investors in the global north, and I think firstly what's heartening is that there's understanding and realization that we have identified a problem. Now to get to, let's call it, that the investors agree that our solution is a viable solution. Lots of times it's a process thing.
Sure.
These institutions take a very long time for their own processes, from the timing perspective of, I think, how we see the market developing. I spoke earlier about endurance necessary in this industry. But what we certainly see is that there certainly is an appetite and an understanding to say, wait a minute, if the risk of the asset changes, certainly my expectations and the role I play in the development of the market or the infrastructure or the country, however the funder sees their role in the life cycle, there's a role for it, and it will meaningfully increase participation. It'll give private equity initial investors a way of which you are more easily able to exit the market. You just have a wider spread of risk and reward investors that are able to interact in the market. In the global north, I think what we hope to see is that if we combine that economics 101 of an inefficient market with a permanent capital vehicle, somewhere where we can say, okay, well, what's the other thing that as a global north investor bugs me about investing in Africa? There are elements of governance and oversight and independence that you would like to see, and exchanges give a lot of that.
Yeah.
How do you make things more trustworthy? You make them apparent. You make it a transparent thing. So you are able to distribute and disseminate information in a way that gives an investor comfort that what you are saying is the truth. It must be accurate information that's reflected. And if one can establish that via exchanges and the regulations around that, then I think you have
remove that risk, perceived risk lower. Yeah.
Well, I think that there's inbuilt risk in infrastructure.
Absolutely. So actual versus perceived. Yeah.
There's actual and then that perceived risk, and a lot of the perceived risk is basic stuff like just I'm not getting accurate information from you. Are you, I don't want to say telling me the truth, but are you giving me the stuff that I need to make investments and track progress and do those kinds of things in such a way that I'm able to put it into my back office, put it into my administration, verified with my own processes? You want that ability given to investors, and you make it easier for them to invest, and that in itself is very valuable.
This strikes me that through this process, you're dealing with a very can't remember where I read it. if it was the World Bank or somebody like that, talking about how changes in a financial ecosystem need to happen to start dealing with SDGs and how to motivate capital. It strikes me as you guys have found a solution here for a half a dozen different SDGs in trying to create a financial ecosystem that provides a solution to how do we do this at scale. Well, it's not one solar panel at a time. There's a different solution to it.
No, absolutely, and I think that if again maybe a view on SDGs. SDGs are not just there with an altruistic vision to give everybody a good life for free. That's not the aim. We're talking about innovating and upping participation in economies and giving people that are currently excluded, for actually very understandable reasons, access to a different level of participation in a different layer of the global economy. And so we believe that there's a reason why one should chase the SDGs and give your business aims a SDG flavor or give it a label, but it is not for purely altruistic reasons or philanthropic reasons.
Yeah.
If we provide the solutions that we hope to provide, we will make electricity more accessible. If we are able to invest in water infrastructure, we make people healthier, and we give children who spend days carrying water from water tankers to their house, we give them the time in the day to go to a school. I think that people underestimate small changes in the use of people's time and the changes at scale that will bring over decades. It's not something where it's like a snap of the fingers and
right, yeah.
And everything's fine. But doing homework by candlelight versus having a light that you can switch on, the ability to just use the internet on a smartphone. It's world changing.
Absolutely.
It's world changing for someone who doesn't have it. And that at scale, and again we come back to 20% of the population, that's growing through these phases.
It's there is no perfect answer. There are answers, and together we have to go on this journe, right? We all have to do our part, like you said.
Again, I think that they are call it macro positions. I don't think anybody can disagree with having access to electricity at a fair price in a safe way is a bad thing. It's not.
Yeah.
Having access to clean water, it's never a bad thing. Having access to quality education, it's never a bad thing. The SDGs are unassailably good things that should be made available to more people on the planet. But you can't do it. You can't do all of them, and you can't do any of them on your own. You can just help a little bit.
Yeah. No, fair enough. So I guess what I'd like to start thinking about here, Mitch, is to say, if you could talk with one individual on the continent of Africa, who would that be for you? Would that be a regulator? Would that be a government official? Would that be a DFI? Would that be an investor? If you could talk to one person, who would that be?
Look, I think it would probably be an investor, because I think that if you have a true long-term view, and I mean some of our investors are family offices, and for maybe that multi-generational view, you find a family office or some multi-generational view, resonates with the changes that are coming. Let me tell you. So I would say an investor.
Okay.
Before I continue on that, Bob, let me tell you why not a politician and why not a regulator.
Okay.
Politicians enact change, but my experience is that election cycles on this continent, and there's probably a debate to be had that lots of places on earth is like that, is that changes like the likes of what we're talking about is difficult to start and see the results in one election cycle.
Right.
And that makes it difficult for politicians and by implication regulators to enact the types of changes that quickly enough so that within an election cycle, within a year or two, you can see the changes. The reason, luckily, reality and the way the world works changes despite what politicians wish. And despite how regulators operate, you can regulate, and I mean the examples are legion. So you can try to stop the way technology work and the way the modern world and progress is going. You can only stop it for a finite amount of time, and then you will have to change. So, at a stage, regulators, I mean, in South Africa, if you told anyone in the South African energy market 15 years ago that you will have the opportunity to build private power plants and wheel the electricity over the utilities network, they would have
called you crazy. Yeah.
Now we are moving into a next day market, and slowly but surely the regulations catch up with reality. The investors, the reason I'd like coming back to who I would like to speak to, an investor that can see this, let's call it global arbitrage of you have this continent and you have this source of energy being electricity and the way it's being used and the massive opportunity it gives to these 20% of the world's population.
Yeah.
There is certainly an unassailable investment case to be made to say, for your grandkids, there must be a thriving African continent. It doesn't matter on which continent you actually live. I mean, we can talk about the implications, for instance, of Africa electrifying with coal rather than electrifying with renewable energy, and the impact that has on climate change initiatives in the developed world. That's just one for instance. But that would be the conversation I would have, is to say, look at the planet, and your grandkids will have to deal with the decisions that you make now in terms of your 100-year investments. And you are investing not in technologies, and you're not investing in short-term instruments. You must have a long-term global view. That's
fair enough. There is some very insightful ways that you have, call it, distilled down the investment thesis here into something that's very, very intriguing for, I think, a lot of people. If anybody wants to get a hold of Mich or GAIA, is the website the best way? Are you on social media? What's the best way for people to reach out to you, Mich?
The best way is the website and email. We are,
yeah.
You're much better on social media than I am. Probably most people are, but no. So the traditional email and website, we have an email address there. I'm also happy to provide it for you in the comments or whatever. We would love.
I'll put it all in the show notes. I'll make sure it's all there. So yeah.
No, fantastic.
You bet. And now you guys said that you've got offices in Europe and expanding into there. Are those people accessible as well, or do you want people to come mostly through your South Africa?
No, absolutely. So we're headquartered in Cape Town in South Africa, but as I say, we have an office in Oslo, and our risk officer sits in London. So there it's pure logistics. If a European party would like to talk, it's easy from a distance perspective. But if you contact us here in Cape Town, we'll make sure that you speak to the right person that's closest and most convenient to you. And luckily now, here we sit. I don't know how many miles we are apart, but we quite a couple of thousand miles apart from each other, and we can communicate quite well.
Absolutely. I think when I'm in Cape Town and you do the whole Apple travel, how far is it? I think it's something like 12,000 miles or something as the crow flies, as it were. So it's a bit of a difference. Yeah.
No, that is absolutely so.
Yeah. Well, Mich Nieuwoudt, thank you very much for taking the time today with Energy in Africa. We'll be sure to continue to have this dialogue, because I think there's things that we'd like to check in with you after 6-7 months and just kind of see where this next stage of your creativity is taking you, and we'll take it from there.
Chris, thank you very much for your time. I really appreciate it.
Good stuff. Thanks all.
Okay, bye.